Good morning, traders. This is my weekend video. Please like the video if you can, and comments below are appreciated. Okay, guys, so we'll get into it. Share my video if you get a chance, and retweet me on X if you get a chance as well. So I'm going to start out with volatility. Volatility was settled down a little bit last week, so we are well below the prior week's weekly central pivot range for the VIX futures. So yeah, so volatility is coming into it, and we're actually closing below the 2-week value, suggesting that we are gapping down. And of course, the cat wakes up and decides to come in here right whenever I start my video. It is looking, we're just kicking off earnings season. Numbers are coming in for the most part pretty okay, suggesting the odds of filling the lower gap are probably better than actually filling that upper gap here in the short term. So that's my main takeaway, given what I'm seeing in the markets. So I just want to let you guys know that. We're still above that critical support area here on the VX futures. Now, what's really happening here, evolved here, is this whole tariff war thing. Trump was the first one to blink as the bond markets a week ago just basically came unhinged, and he had to reverse policy. And if anything, the past week, things have gotten a little bit better. So, guys, the pendulum has got literally went to a very extreme on monetary spending. And so we spent $2 trillion just to get up to where we were in the markets, those highs. And basically, the return on our investment for every dollar spent, we were getting right around a quarter uh, return for the overall economy. We're back in the late 70s, early 80s. You were getting 10, 20 times the return for every dollar spent in government spending. So, we basically backed ourselves into a massive corner. The more the government spent, the return was very diminished in for the economy. So the pendulum went one direction, and the Trump administration came in. We're gonna flip that pendulum to the other direction, and it was a admirable feat. But what they did, they addressed they came at it without backstopping how they were going to do it. Okay, and they underestimated the power of the bond market, and what they should have came in and backstopped the bond market before addressing the tariff issue. And what do I mean by that? Um, Myself and other guys that I've talked with and stuff, we had discussed this for a couple of years now, about how uh, they need to have um, a permanent demand side for the bond market before they make any type of major fiscal changes into our economy, in our opinion. And basically how they would do that is go kind of have Congress come out and make it, because 401k is a government entity created by the government. What they need to do is basically half the money that people put in their 401k are required by law to go into U.S. Treasuries. And then you have a permanent demand side for the U.S. Treasuries by the U.S. consumer. And then you also have the U.S. consumer skin in the game in the Treasury markets. And now all of a sudden they're going to start paying closer attention to fiscal deficits. So in the long run, it's a real win-win for our national economy by having more and more people invested into U.S. Treasuries. But by doing that, you have a permanent uh, demand component for the Treasuries, and then you can address the fiscal deficits after that, because you do have, or you'll always have a natural bidder in those U.S. Treasuries as you're trying to change the bigger themes in the economy. Okay, and so that's the big mistake that Trump did. That's why all of this noise that he's making about these tariffs are going to be so good for the economy. Net for net, at the end of the day, they're probably not. They're probably going to be more destructive than they are good, because, like I said, they did not backstop the situation ahead of time, and so that's just some things that I've been discussing with my friends, how to address the big massive change in the economy, which I do think needs to be done. It's just Trump did not backstop like he should have. Okay. So I talked about the VIX. Now let's go over to where do I want to go next? 1 second here. Okay, real quick here, guys. Week on week, this here is your central pivot range for the week, and it develops from the inventory from the prior week. And we close right at the central pivot from the prior week. So basically, we really have stabilized here in the bond market on a week-on-week basis. Uh, so that's really important to know that, on a week-on-week basis, like on a 2-week basis, the central pivot was way up here. So let's just definitely keep that in watch. But on a week-on-week basis, that is good. We are starting to stabilize on the bond market. Okay. Other things going on here / yes. This is your S&Ps here, guys. Okay. So we did close on the came right down this past week, right to the week-on-week central pivot, and immediately found buyers, showing that there is a bid under the markets. The way, see how we're wicking right here, right off that central pivot from last week. So we found buyers immediately, and we only wicked down one time. So that is a big tell going forward here as earnings season's starting to pick off here. This was really warning us. You'd be very careful on the short side, knowing that we only wicked at one time and we were having a lot of trouble going back down. So be very mindful of that. We do have major resistance here up here in the purple. We are trading below that, so it's a very little dangerous here. So basically, we know for a fact if we were to lose last week's lows, that is potentially opening the door for more downside. So let's definitely keep that in the watch here. We did close below the prior Friday's close, so we did manage to resolve on a week-on-week basis. That's slightly lower here, but still not too bad here. Okay, so just definitely, we're actually closing. See, we closed right here. The prior week central pivot range is right here. We closed right there 2 weeks ago here, right below this supply demand zone. So basically, we're basically in 2-week equilibrium on the markets, in my opinion. Okay. NQ. NQ had some after hours Thursday, some really good results on Netflix. So basically, what we got going on here, see the central pivots are virtually exactly the same for the past 2 weeks. And we are still trading up on the bullish side of that. Okay, so that is good on the relatively good there. Okay, uh, so basically nothing really standing out here. We are well below the prior Friday's close. Held the market maker move low. So basically, we had our predictive models, and basically we walked down through the week, and we held the predictive model low. That's pretty much what I've got going on here, with only one tag of that predictive model low. So we know that if we were to come in this week and lose the predictive model below, hey, that's opening the door for further downside in the markets. We'll see how it plays out. Okay, this is our critical breakup here, 19,380. That is, or 380. So that's major resistance above us. This is still just on like on the S&Ps. This is still a bear on a bigger time frame. It's still a bear flag. So we have to be mindful of that. So technically, we are still in a bear flag, just same way with the S&Ps. Okay. Similar situation, technically still in a bear flag. Okay, below the purple there. This is, see how it's tightening up a lot more tight. This is showing relative strength. So guys, be very mindful here how we're tightening up on the Russell, showing a little bit more relative strength here. So let's definitely keeping an eye on that right into that supply or that bear zone. Now this is technically a bear flag, but the fact that we're tightening up as tight as we are, that is promising. Doesn't mean we're and to where we closed here. See how we closed above this range right here into that. this is really looking promising to the upside. So be very mindful of this. I mean, I got top watch, bullish watch for next week, a potential rotation into the Russell. So be very mindful of this, especially if the bond markets continue to stabilize. This is looking quite promising for potential upside. So be very mindful of that. I haven't really updated the YM here uh, as far as my levels go. This here really got hit Friday because of the United Healthcare. So we're really getting a mixed bag here. This one here is threatening a breakdown. So heads up on that. See, we came right into this supply. Right here is a level right here. So the Dow's only 30 names, so I don't really want to give it too much weighting. Okay, so this is a resistance area that we did manage to come up, and we rejected from that. So we have to be mindful of that. That's why you're getting some signals both ways, but there's only 30 names, and this is a price-weighted index too. So I don't really want to give this a lot of credence. So, I really want to stick with the S&Ps, the NASDAQ, the Russell. Much rather stay with those names versus this one here. This one here can give you false signals all the time. Okay, so be very mindful of that. Okay. Okay, guys. Apple, guys. So Trump comes in. He pauses on the global tariffs. With just China being hit with the global tariffs. So Apple didn't participate in that initial rally that much. But then Trump comes out and he says that he's going to expand the tariff relief on um, semiconductors and computers and stuff like that. And Apple gets a big rally after that. We're currently uh, we actually lost a very critical area right here, and we're back testing it going into next week. So we definitely got to keep this on watch. The downtrend is still very much intact here. Uh, so we have to definitely keep this on watch, just giving us a little bit of a warning. It's technically because we're over our weekly central pivot range. I mean, this is technically starting to resolve a little bit more like a bull flag-ish situation here, a potential bull flag, given how we are relative to the week-on-week central pivot. So on a 1 week basis, that's like a potential bull flag. Okay, but on a 2 week, it's giving us 2 and 3 week. It's giving us still a bear flag. So heads up on that. We definitely got to that we know for a fact that this 193.50 has to hold. Okay, so going forward here, critical 193.50 hold, and we did close well below our weekly VWAP. Okay, so let's definitely keep that on watch going forward here on Apple. Microsoft, I love trading Microsoft. It's one of my favorite traders because the ranges are wide. You just got to time it right. You get a lot of juice whenever it does decide to go one way or the other. This is just really one of my favorites to trade here. So really showing some weakness here. And we actually closing down below a critical support right here. And if you go out here on the bigger time frame, see how this trend line we got going on here, we're closing down below that. So heads up on that. So we really want this to regain, but we're right into a potential support area that has acted as support before. So we don't want to get too short in the hole here. But I do want to point that out there. That's giving us a little bit of warning on the close Friday, and the fact that we're closing right here at the weekly central pivot low is a little bit of warning as well. Okay, so I'd much rather, given where Apple's closing, I think it's more bullish than versus where Microsoft's closing on a week-on-week basis. Uh, so heads up on that. It's giving us a little bit of warning here going into next week. Okay. AMD giving us warning going into next week that we might be finding a rejection here. NVIDIA warning us. See how we're closing right here at central pivot lows. That's actually giving us more of a warning. Okay. Tesla, definitely giving us a warning. Week on week, breaking a critical. Let's see, this is a support area right here, a very critical support area. Heads up on this. Very critical support area here that we are looking below going into next week. Meta, very, very, wow, that's just, so wow, that's not looking good. Not looking good at all. Heads up on that here on Meta. That gives you some idea here. Most of these mega techs, the big techs, the ones that are the biggest concentration in the market, they are giving us some warning, week on week warning signs here going into the first week. But we do have our first mega tech that did report. That was Netflix. Fairly good results. Could this be uh, you know relative weakness before you know uh, traders realize things aren't going to be as bad as what they think. This could be very easily be, just max fear before the earnings season kicks off for these names. So, but the multiples are pretty expensive still, and historically, whenever you come back to 18 times forward earnings, or earnings, that still doesn't typically mean the end for the cycle correction. It can go as low as 14 times. Okay, guys. So I would definitely be on the lookout for further downside in the markets as the markets very possibly may have not washed out quite yet. So just heads up on that, in my opinion. Just a few things here, but we really didn't close very good this here week on some of these megatechs. I definitely want to point that out. All of them there, Apple actually looks one of the best of the bunch. Did I do Google? See, similar situation. We close them below the central pivot. I don't like it when we have a weekly close below the current week central pivot. That suggests a week on week weakness uh, setting up. So heads up on that. So we're going in. Almost all these megatechs are closed below their weekly central pivot, and that could be a problem. So definitely be mindful of that. Okay, thanks a lot for watching my video.